US crude has yet again traded bearish last week, achieved close to $75 levels, and you can see the bearishness has certainly diminished. You can find out that the candle size has certainly diminished. So what to expect next week? Can we expect a rise, or is it going to crash further till towards $70? Which position we should take in order to profit? We will see with the help of charts and indicators. Towards the end of this video, I will give you the trading levels and strategy for next week. So do watch till the end. Do like, share, subscribe and comment. Do press the bell icon, which will keep you updated with the daily update and targets on oil, which I share with the Asia session very early in the day. So do watch that analysis as well. Do press the bell icon. Let's start. Now first let's have a look at the daily charts, and you can find out on the daily charts. Yes, crude is trading in this channel, in this bearish channel, and you can see there was a one bigger drop very early in this week on the Monday first trading session, and achieving the drop, it is recovered smartly. However, it is still trying to trade in this channel, the bottom of this channel. If the time as the time passes by, the high is certainly at $80. If you see it trading above 80, certainly you can remain long. Till the time crude traded below 80, we should refrain from trading long position. But yes, beyond 80, certainly more bullishness can be expected. Right now it is looking downwards, and any break, if you see below 76 next week, then you can expect 75, very good support. That will be the double bottom here, what we had seen earlier this week, and from there what we'll see how it behaves. Achieving 75, below 75, certainly more bearishness till towards 70. 2.8 levels can be expected, and below that 70 levels cannot be denied. So this is just on the weekly charts. Also look at the daily charts, how it is behaved. You will find that, see, this was a bearish zone, then double top is done, and then now again trying to trade bearish. So we have to be cautious here. It is trying to drop, but at the same time 75-76 zone is certainly a very good support is providing. Now let's have a look at the weekly charts. On the weekly charts, we observed earlier that crude so far was trading in this zone throughout the bottom during the COVID times, and since then it has shown a strong rally, and after achieving the top here, it is trying to trade in this zone. Now see one part, if you look at this rise, and then if you connect this rise, you will find that the bottom is certainly not far away. Let me show you why. See these three bottom here, higher lows are seen, and now it is trying to again at least achieve this zone, which is precisely positioned at around $72. So this zone is going to be very important support levels for crude, as it has shown an expanding triangle behavior since then. So I will be watchful of $70 only, and only if it breaches 70, you can expect further more bearishness. That is what we had seen several times in our previous analysis too. So you have to be very cautious at 75, 76. Certainly it is getting a very strong support at those levels. Once it breaks below 75, it may show you a little more bearishness, taking it till towards 73.5, 72.8, and then the crucial zone at 70, 72. This is going to be a very, very important support zone. Now look at the monthly charts. On the monthly charts, very importantly, you will find that, see, higher highs, lower lows, and yes, after a smaller bullish candle last month, it is again traded with a drop. Now see, where is the support? You will find 75 levels. You can find out 74, 76 zone. Very important support lies here. Multiple months it has tried to trade around this zone, and it has achieved these levels again. Hence there is a probability that it may try to get maximum support there, and if it does, then the next support should be on the weekly charts, as we saw it at around 70, 72, and below that this zone is going to be important at 60, 65. Yes, there is a lot much ground to cover. However, it is trying to consolidate here in this zone. It may try to consolidate here in this zone, and then we'll see how it behaves. At the same time, another observation on the monthly charts, look at the previous candle almost forming the top there. It has reversed all the gains from the previous month, and this is the first red candle. And a big bearish candle also indicates that after a green first red candle, it also indicates that there could be a possibility that it may breach on the downside for the month of December, where you can expect it to hit $70, $65, which is probable. If it breaks below 70, certainly more bearishness can be seen. For the next week specifically, you should watch out for $75 levels. If it breaches this, you can expect 73.5, 72.8, and then below levels. So this is what we can see on the charts. Also look at the 4-hour charts. On the 4-hour charts, see how it has behaved. We can find out higher lows are certainly seen. See a sharp drop, smart recovery, consolidation, then again higher lows, recovery, consolidation, and then slightly lower lows are seen, and hence you should watch out for 75 and then 73.5 zone. First resistance zone, then 70 to the next resistance zone. We'll be careful on those levels. Now let's have a look with the help of indicators. What does the indicators are suggesting on the 4-hour chart? It is trading at the bottom of the Bollinger Bands below 20-50 period moving average, indicating bearishness. The directional movement is moderately bearish. The stochastic has come back to the oversold zone, and whenever we have seen oil coming to these levels, it has seen a good recovery, and hence probability exists that it may bounce back. However, you should be careful of $80 levels. Only above 80, you should consider this as bullish. Till the time it trades below 80, I will not consider this as bearish at all. Now look at the MACD lines. You will find out that the MACD is again crossing over for a sell on the 4-hour chart. The RSI is trading at the bottom, but this is on the 4-hour charts. Now the most important ones is the daily charts. You can see it was on the verge of a crossover, the 20-50 period moving average. Now again the 20 and 50 period moving average have crossed over, and this is a bearish cross, which indicates that the bearishness is certainly there. However, one must observe that it is trading at the bottom of the Bollinger Bands. Either it has to show you a very sharp bearish move again, such that it can expand the Bollinger Bands further and continue with the bearish momentum. Till the time it trades within this, there could be a support here at 75, which may try to push the prices up again. You need to be careful of this. It is trying to trade in this zone, and hence any move above 80 certainly should be taken up seriously for a good bullish reversal. Now look at the directional movement was bearish, trying to converge here on the daily charts. The stochastic is looking downwards here, and if you look at the MACD, this is divergent and bearish. This appears that probably there is still lot much there on the downside. As we can see here, the previous bottom are so far away. Now I'll wait for it to converge a bit or show you signs of convergence. Else you can see the height of the red candles here. It is almost flat, and it indicates that the bearishness is not it's there, but it is diminishing nature, and hence we need to be cautious with the shorts till 75 levels. RSI looking downwards, trying to enter into oversold zone. And if you look at the 4-hour chart, weekly charts, you can find out on the weekly charts it tried to breach the Bollinger Bands, and now almost trading at the bottom of it, and hence we need to be cautious. It may give it a very good support here at 76 levels, below that 75, and below that a good drop further can be expected. It is trading below the 20-50 weeks average, indicating little more bearishness. So last 2 years the average price of oil was $80, and now it is positioned well below those averages. You can find out there is an increasing bearishness here on the directional chart, and yes, if you look at the stochastic, it has seen the high, and now it is trying to further look downwards. The MACD is also trying to trade bearish. It is increasing in nature. It can further continue to trade bearish. I will observe a little more here. Yes, it has the potential to drop till here. This is the COVID times. However, you can find out the oil never has breached below minus 500 levels on the MACD. That needs to be taken care of. This was the time in 2015. So very rare observation there. Yes, it is achieved that probably the bottom is seen, but I will wait a little more. As you can see, the highs there at plus 500 plus 1000 levels also indicates that there is a possibility for it to achieve minus 500 minus 1000 levels also. The RSI is looking downwards on the weekly charts. That is also one indication that there is still more room for it to drop, but let's be observant. On the monthly charts, you'll find the 20 months average is far above, now at 85 levels, and it is trading below the 20 months average. And the 50 and 100 period moving average is now at around 60 and 70 zone. So this zone, if it continues to trade below 70 levels, certainly this is going to be a maximum support zone at 60-70. Any point of time, these levels I will not see it breaching. I do not see oil breaching below 60, but these are markets. Anything and everything is possible. Look at the monthly charts. It was trading bullish so far since last 2 years, and now it is looking forward to a crossover for a sell. But the stochastic on the monthly charts is now trading oversold. See, we expected that it was trading overbought since months, and now it has seen a good drop again, coming back to oversold levels. And if you look at the past history on the monthly chart, that was the COVID times, that was pre-COVID 2019, and before that it was 2015 when it has come back to the oversold zone. So this is again a rare phenomenon on the monthly charts for oil, that it is trading oversold on the stochastic. But at the same time, now look at the MACD there. This is divergent, this is bearish, this is third red candle. We can expect few more red candles for it to sustain, and it can continue its downward trend for a little while before it tries to recover a little. See, this crossover is happening. at a peak point there. Now also one must observe that it is trying to trade in this and there is a possibility for it to further achieve the bottom. Hence, one must remain cautious on oil till the time it trades below 80. I will not consider this for a good rise, but yes, above 80 levels, you can try to initiate a buy position for 84, 85, and then above levels can be seen. RSI looking downwards, indicating little more bearishness. So we have seen the charts, we have seen the indicators. Time for us to define the strategy and levels for next week. And yes, before I give you the charts and levels, if you want to learn this art of trading profitably, you can join my mentorship batch. The last batch of this year 2022 is going to start on 28th of November. 2 seats are left. You can reserve your seats now. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Hit the channel description button, about channel description in the homepage of my YouTube channel, and you'll find that my email IDs and Telegram IDs are mentioned in there. Now, let me give you the levels, and our only buy entry now next week is above 77.2 levels. Then again you will find 78.2 the next resistance, and then 79.2. So once it trades beyond 79.2, you can expect $80, and beyond 80 it is going to fly high. Beyond 80 you can stay long for 82, 84, and then 85 levels at the max resistance. Beyond that, sky is the limit. On the upside it is going to fly high. Must watch out for $80 levels and then 78 levels. So for oil, this zone 78 to 8 is going to remain critical for next week also, only and only if it reverses from those levels. Remember, the new monthly candle is going to start, and this will decide the direction for oil for the next month also. It may try to take a strong dip before it tries to recover, and hence you need to be careful there. On the downside, I will recommend you to sell here at 76 itself. Below 76 you can expect 75.2, and then below that I will directly expect it to land for 74, 73.5. Now see, a little more support at 74, 73.5 is there, which can again prove out to be good support, and then 72.8. Below that, a good crash can take it till towards 71.4, 70.2, and then it is going to continue with the bearish momentum. There is lot much on the downside to yet to cover. If it trades below 70, I'll expect one to remain short for the next couple of months also, and then you can expect 65 level, 65, 70, 60. This zone is going to be consolidation zone again. Only bearishness is seen if it trades and sustains below $70 levels. Remember these words. For next 2 months, next couple of months, you need to be careful there. Only bearishness is if it sustains below $70 levels, and then 60 to 70 it is going to consolidate there for a little while, swinging in between $10 for a few weeks, and then probably later, after a few months, few weeks, we may see it recovering again. Hence, you need to be cautious here. Take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Thank you very much. Have a great profitable trading week ahead. Thank you.